Today, we're going to go over how to find the best key levels, and also we're going to go over a little bit of intraday setups. Before I even do anything, I go over to the 1 hour time frame. And what you guys have to remember about me is I take the best and leave the rest. If there's not a 1 hour time frame set up here, then I'm not going to take anything. It's as simple as that. And I look at a basket of 4 stocks: Nvidia, Tesla, SPY, and Qs. That's it. So if there's not a downside level on Tesla, for example, there might be something else that's setting up on one of the other stocks. So that allows me to not force a trade, and I only take the best and leave the rest. Now, when I go to this 1 hour time frame, I'm looking for something very specific, and it's going to be reactions. What I'm looking for is very reactive areas. The reason why I like reactive areas is because the way that my strategy works, you guys are seeing these huge breakouts out of nowhere. You can't expect a different outcome with the same exact equation. For example, if it's choppy and slow in the area previously, like for example right here, then you guys can't expect a crazy move in one direction, because that same exact equation is going to equal the same exact number. So that's why I'm looking for these reactions where it rejected super hard or broke out super nice. And it's going to be around this area right here. As you guys can see, price is reacting, meaning that it's literally rejecting. Price is stopping in an area. It came up, stopped there, came up, stopped there, came up, stopped there. And then guess what? When it broke out crazy. And I remember taking that exact trade to the upside. But this 1 hour key level, where exactly are we going to put our level, right? Because you guys can see all these wicks, you guys can see the candle bodies, but I like to see no candle body close above that area if we're looking for an upside move, or for the downside, I don't want to see any candle bodies closing under that level. So let's make this, let's say 361, right? Because the reason why I didn't do 360 is because you guys could see that it broke above it. But take a look at this. 361, there's candle bodies above that. So now we're going to have to go to that next key level, which is around 362. So now that we have this 362, I'm also going to mark out a potential 363, because this is above any single wick. Now, I'm going to mark out those two levels just in case, but I really like one of these two levels right there. And then as you guys saw, it broke out. Again, I took this exact trade. This isn't hindsight. This isn't anything like that. This is the exact trade that I took, and I remember this perfectly. Let's take a look at something like Nvidia, for example. As you guys can see, we have this nice reaction there. People taking profits. Then we have this huge move to the downside. Comes back up, retests 132 exactly, and then comes back down. Again, as you guys notice, these are all whole numbers. I'll never do 132.4, 132.7, and the reason being is because the reason why this is a key level in the first place is because there's a ton of orders sitting there. Again, everything is invisible, right? We don't know what's going on in the market, but once price starts reacting at a certain area, and then it starts reacting literally exactly at a whole number, then we can check how big that wall is at 132 and see that there's a ton of orders just waiting to be executed there, which is not allowing price to go further to the upside in this example. Which is why once that breaks, you guys see this huge moves in literally 20 seconds. And it's because there's a ton of orders waiting to be executed there. Once we get enough buyers to get rid of that seller wall for this example, then we have that huge move to the upside in literally 20 seconds. So now we have to figure out where are these walls at, because everything is invisible. Once it reacts, we could see, okay, potentially there's a wall there. And then we react right at 132 again. There is a wall there. So now we have one reaction, two reactions. Now we're slowly coming up. But if we're able to break that 132 with aggression, then we know that once we come up to that 132, as long as that time of sales is looking good, there's enough buyers coming in that area, and it's still reactive intraday, then I will take that to the upside. Now, a big misconception is just because you have a level there, it doesn't mean I'm just going to take it like that. We have to make sure that previous price action is looking good. We have to make sure there's an intraday reaction, and we also have to make sure that the time and sales is looking phenomenal. This is just a start. This is the foundation of where potentially we're going to execute a trade off of, and then now we need those other things to come into play for this 132 break. Another great key level example here is this 534. As you guys can see, we came up to this 540, rejected that, came down, and we're starting to bounce off these areas. But we have this huge move once we break out of this area right here. And in my head, I'm already doing this automatically, but for you guys might not be there just yet, but this is exactly what's going on in my head, where I'm thinking, okay, in that area, there's reactions, and that's what moved price down. We reacted right there. We broke out of it. It looks nice. Where exactly is a key level right there? It's either 534 or 533. Then you look right. We keep looking right, see any reactions, and then look at this, right? We can't do 533. Why? Because previously I said you don't want to see any candle bodies closing above that. 533, it already broke, right? The candle body already broke. And think about it, right? For our breakouts, they just go. Why would I get in on 533 when previous price action showed that it stopped at 534? So this is going up to 534. This is going up to 534. So it was either between 533 and 534. 534 looks phenomenal. And now we're slowly getting back up there. And that's why I tell everyone, take the best, leave the rest. I'm looking at that 534 to the upside on Qs. And let's say, for example, we're at 530 area and it's still $4 away. People might force stuff and people might just get in on these bad trades when it's like, I'm just waiting for 534. That's why my win rate is so high. That's why my risk to reward is so nice, because I wait for the trade to come to me instead of going to that trade. Nothing in life that you chase will reward you the same as not chasing it and letting it come to you. And that works out with everything. So now all you gotta do is wait for the best, leave the rest. Again, what I also want to see intraday is something like this. For example, we go to the 1 minute time frame, and a lot of people are like, 1 minute time frame, that's so small. Listen, I trade off the 1 minute time frame. Super profitable, very consistent. It's not that risky at all as long as you manage it well. I think it's more riskier the way that a lot of you guys be trading. So this is a great trading strategy. And again, those reactions that you see when I take the breakouts and they're going crazy, I also look on the 1 minute time frame to see how it reacted previously at that key level. On the 1 hour, it could look super nice. On the 1 minute time frame, however, it could look terrible. So I want to make sure that not only does the 1 hour look good, but the 1 minute look good, just to help increase my win rate just a little bit more and prevent a fake out when we could see that previously it reacted weird. So it has a high probability of also acting weird at that level if it did that previously. So let's go over an intraday reaction. And this is something that I just took a couple days ago. So as you guys can see, 105. Found it on the 1 hour time frame. This was all-time highs. This is something that I took as well, all live in the Discord. Link is in the description below. You guys could also join for free if you guys want. And we reacted there intraday, right? That also gave us that 1 hour level since this was all-time highs. Now, I'm trying to find a key level that is at that all-time highs, and the next thing I'm looking at is that 105. The reason being is because 104 already broke pre-market, right? 104 also broke pre-market right over here or after hours, and we reacted there, and then we reacted closer up. I love these closer reactions. And then we see that it kind of came up and reacted exactly at 105. And you might be like, how'd you not get faked out? What if I anticipated this, that, this? Time and sales, previous price action, that allowed me to not get faked out there. I mean, first of all, look how we came up, little pullback, came up. First off, this candle body is getting smaller than it was previously. These wicks are starting to be more present over here. It's a little back and forth. I can't take it, especially if it goes back and forth twice in that area. It just looks like it needs a pullback, and we come up to 105, came all the way back down, and then what we noticed was sellers got stopped higher than they did previously. Sellers got stopped right around 101. Sellers got stopped right around 103. And then we absolutely just changed direction. That's exactly what I want to see, is these sellers trying super hard and these buyers are like, absolutely not, and just kill them, put them in their place, and explode through the previous candle. So this candle just went crazy over this, even though it looked so weak and buyers were like, absolutely not. Then you guys can see by this wick, and again, I trade this live. Like, this is not hindsight as most people see on YouTube. I saw it went red to green. It's going nuts. Looks super strong. And if you've done this a while, then you could just tell the story of every single candle as it's getting played out. You'll be able to get a real feel for all this price action and all the previous price action. And if I see this, for example, like these two candles that look super small and they're kind of just sticking at 105, then the chances of a fake out is very high, but you won't know that at first. That's why I say put the reps in as well, because I just know this from experience. But as you guys can see, we went red to green, going crazy. We get in right around that 105. Time and sales is also looking really nice. Buyers are really coming in there, and we are able to break out of that 105. And the next thing you know, we start flying. And then we sold right around this area. I know this isn't a price action video, but I want to go over this real quick just because it's like, this is what's going on in my head, right? We came up. These candle bodies are getting smaller and smaller. These are about the same. Then we start having this wick right here showing that it's getting slower, right? Again, this is in hindsight. I was in this trade. I was saying this out loud when I was live trading. It's getting slower. How do we identify that? Not only with the time of sales, but you can just look at the candles and how they're getting formed. We come up, we're starting to slow down in this area around this like 105.8. We already came up about $2-3 almost, and we probably need a pullback. Now, that's not saying, oh, it's going to pull back here, but the probability of a pullback is getting higher and higher as we're starting to slow down. Wick right here, candle body is getting smaller. Another wick right here. Then we start to slow down here. Now, this pullback was a lot smaller than I anticipated, meaning this has a high chance to come to at least around right here, and it did. Right? But then buyers brought it right back up. So this didn't give us enough of a pullback to justify a nice continuation. Number one. Number two, these wicks right here, like wick right there, candle buys getting smaller. We could have easily came back down, retested 105 and then went. But the fact that we're having these two wicks right here, it's kind of back and forth, a little indecisive. Then buyers try again. They're like, all right, let's try it again. And then these sellers like, absolutely not, bring it down. Looking at this, it's like, this has such a high probability of coming back down to 105. It's insane. I've seen it. 90% of the time, this is coming right back down to touch that 105. So, right, I'm a good amount out once we broke that 106 because I identified that around that 106 area, we're getting really slow. So I was probably like 75% out at this point. Next thing you know, buyers out of nowhere decide that they're just going to kill off all these sellers, and we explode past 106. We get past this high and we're at this 106.6. I sold there. The reason why I sold there is because we had such a high probability of coming down that these buyers decided, I guess, you know, to exert all of their energy into one last candle and get one last rep in. And I've seen this time and time again. Yes, it could have went up, but you also, it's such a small probability, just like how you have such a small probability of winning the lottery. So in order to build a profitable, consistent system, you have to keep everything the same. And 90% of the time, this thing will reverse right at that 106 area, and it decided, you know, it's going to give us one more last rep, and then that's when I fully sold out, because I've seen that so many times, and every single time, for the most part, it will go right back down. Think about it like you're bench pressing and you're on your last rep, and you're really pushing your boys, like, go for it, one last rep, and then you do one last rep, right? You give it your all. That's how I feel about that. Right, in that situation, it literally was showing that it's about to give up, and it's like, no, one more, gave us one more, getting fully out there. And most people don't dissect that price action, right, the way that we do. No one really just like feels and knows the story that it's telling per candle. You know, this allows me to get these perfect executions almost every single time. Best sells ever, best buys, and our risk management is so flawless. But this is also in association with looking at time and sales. And as you guys can see, it's slowing down at this 107 again, and then we probably start falling. And then we start slowly falling right back down. You have to know when is the highest probability to enter, the highest probability to sell, you know, highest probability that it's about to reverse. So you can just base everything around that. If you guys enjoyed this video, let me know in the comments down below. and I'll see you guys in the next video. Peace.